Untuk kita mula lanjut, I want to bring in David Stibert, Country Director Singapore, Dezan Shira and Associates, joining us this morning. Good morning, David. Thank you so much for joining Niaga Awani. First of all, President Trump, of course, has introduced a 10% baseline tariff on all the imports to the US, with significantly higher rates on certain countries. What message is the US sending with this move, and is this purely a protectionist move, or does it address genuine trade imbalances?
Good morning, Najib. Thank you very much for having me. That's an excellent question. I think many economists, governments around the world, they are not quite clear what message the US is trying to send here. From an economic perspective, tariffs make it more expensive to buy goods from certain countries. There are a tax levied on imports. And now the question is, what does the US try to achieve here, right? So Trump has been very vocal in favor of tariffs, and I think this goes back to the 1980s when he complained about Japanese imports to the US. So he sees this as an important tool to bring certain industries back in the US. However, it doesn't really work like that. So the question is, what is the goal here, right? If it's for manufacturing to return to the US, then this may not happen because, for example, let's talk about textiles. If the US wants to have a textiles manufacturing industry, this may not work because labor costs are very high. And the existing supply chains, they are optimized for costs. So that means the products that are imported into the US now, they come at a comparative advantage. It's cheaper to produce them in countries, for example, like Cambodia, and then import them to the US. And US consumers benefit from this by paying lower prices. Now, you put tariffs on that, US consumers will have to pay higher prices. And most likely demand for these products from overseas will go down, but there may not be a substitute available in the United States. So the question here right now is what the purpose of this is. And I think many economists, many businesses, many governments around the world are scratching their head now at the decision to have a universal tariff of 10% on all countries levied, basically. And then, of course, higher tariffs on other countries where the US says, oh, there's a certain trade deficit with the US, and that needs to be addressed. From an economic standpoint, a trade deficit is not necessarily a bad thing. Advanced economies like the US may have trade deficits because they need to import certain goods at lower prices, right? Their consumers will benefit from this, and they will not have the capacity to manufacture these themselves at very low price points. In general, though, economies like the US will have sophisticated products that they themselves sell. So let's say electronics, for example, Apple, aircraft, Boeing, right? And in other countries, for example, let's say Cambodia, Vietnam, there may not be a lot of demand for these kind of products because these countries are relatively poor and they couldn't buy enough from the US to balance trade. Basically. So this remains an issue. And like I said, I think many businesses and economists are now scratching their head at what the point of these tariffs is.
It's funny to look at the list because Harold's Island and McDonald's Island is also listed where only penguins live there. But how do you see the key trading partners such as China and European Union, ASEAN nations, expected to respond to these new tariffs? Do you foresee retaliatory measures from these countries?
Excellent question. So countries can respond in two ways. One is you don't do anything, right? Because if you respond in a retaliatory fashion, so that means you also levy tariffs on US products, you hurt your own population, you hurt your own consumers, because suddenly they would have to pay more for US products. So that may not necessarily be an option. And I think especially in ASEAN and for smaller economies, we see that they usually don't want to retaliate because it would also hurt them. Now, for larger economies like China and the European Union specifically, they buy quite a significant amount of American products, and they have the option to retaliate by focusing on specific US industries. So let's say Harley-Davidson, Tesla, for example, electronics, as well as agricultural imports. And they could say, okay, so we're going to put tariffs in return on American products coming into our markets. This would, of course, cause pain for consumers in these markets and companies doing business there. The goal here would be to force the US to the negotiation table. So it would basically say like, okay, look, we can also inflict pain on you, and we should probably negotiate. We have seen in previous rounds of the trade war during the first Trump administration that the EU and China are willing to do this. And then it depends on how the Trump administration responds. At the moment, we see a quite high threshold for pain in the Trump administration. So if you look at the markets now, they have been crashing since the announcement yesterday. And it seems like the Trump administration is fine with that. So then the question is, if there are retaliatory tariffs levied on US products by China and the EU, is this causing enough pain to force negotiations right away? Or is the US willing to accept that?
Yeah.
Looking at what's been coming out of the White House recently, I would say they have a very high threshold for pain here, until I guess there will be large spread protests because prices are increasing, inflation will increase in the US. So we have to see how that plays out. I do believe that the EU and China will institute retaliatory measures on certain US industries, but I think these responses will also be measured. Nobody wants a trade war and an escalation, but of course these economies have to respond because now they will sell less products to the US, and they need to address this, and they have the market size to put pain on the US in return because of the amount of US products they buy.
Let's talk about the threshold that you mentioned just now, because given that the room of threshold for the US is quite big, but in terms of other countries, many analysts expected or predicted and foresee that due to the tariff war that's happening right now, many countries will fall into economic turmoil in that sense. But how do you see, given that inflation remains a main concern worldwide, how might these tariffs, impact or affect global prices, particularly in the US? Because whatever happened in the local US economy, it will also impact us in terms of determining our OPR, for instance, and also our monetary policy. But how do you see the whole picture?
Yes, and you're right, it will affect the entire global economy. So the US is levying very high tariffs on all imports. This is the highest rate in the last 100 years. And this will, in the short term, raise prices for US consumers. That's a fact, because a tariff is a tax levied on imports. So when you look at this in the case of Vietnam or China, these are very, very high tariffs, almost 50%. In case of China, actually more than that, because it's 34% plus the 20% that were in place from earlier this year. So the US is actually importing 42% of all imports from Asia. And you can see that with the tariffs announced, and you showed the chart earlier, Asian economies are squarely in the crosshairs here. So they are slapped with very, very high tariffs. And that will raise prices for US consumers. Then also for low-cost imports, the US had the de minimis exemptions for imports below $800. That was also removed. So low-cost importers, for example, Shein and Temu from China, these e-commerce giants, they will have significantly higher costs now exporting to the US.
Yeah.
They will probably pass this on to consumers, which then have to pay higher prices. So prices will rise, inflation will also rise. From a monetary tool perspective, the concern here is that this may push advanced economies back into industrial recession. And the risk is magnified because we actually had a period of high inflation and central banks worldwide were trying to tame it. And we will see that like many staples, so electronics, cars, even other consumer goods will become more expensive, hitting low-income households the hardest, and especially in the US. But of course, this will trickle down to other economies worldwide. It's like pouring gasoline on the inflation fire, basically.
David, the global economy and global trade is intertwined in that sense. But how do you foresee the multinational corporations adjusting their supply chains, to avoid, in that sense, US tariffs? Could ASEAN countries benefit from it?
Excellent question. So during the first China-US trade war, during Trump's first presidency, ASEAN was a net benefactor, right? Supply chain shifted. There was a China plus one model. Multinational corporations shifted some of their manufacturing to ASEAN, Vietnam, for example, Malaysia as well. Singapore, Thailand, Indonesia were net benefactors of this. Now, however, I know that the countries in Southeast Asia, ASEAN, we're all slapped with high tariffs, except for Singapore, but even Singapore had a 10% tariff rate. And it seems like that is definitely affecting decisions by US companies to produce in the region. So, for example, if you take Vietnam, they have been slapped with 46% tariffs. Now, does it make sense for a US company to open a factory there anymore? I would say that depends on whether these tariffs get removed, right? So at the meantime, I would say there's limited opportunity here for multinationals to establish supply chains for the US. I think companies would have to invest in the US market for this. But I would also like to point out that the decision to relocate supply chains, this is not done in a month or half a year or even a year. These are long-term decisions, right? So if I were to build a factory in ASEAN, this would be a several $100 million investment. And then the question is, does it make sense to do that, right? So if I foresee tariffs in the future, then maybe not. If I foresee that Trump is zigzagging and he may change his mind on this, then maybe yes. But at the moment, there's so much uncertainty, it's very difficult to speak about investments. I think we have to wait and see. I believe that the US administration is trying to get concessions from trade partners. So hopefully they are open to negotiation. And I think we've also seen this with Canada. There was a wave of tariffs. So it really depends how will the US respond to negotiations, or will these tariffs be in place for a long time? But even if these tariffs are in place for the entire Trump administration, what happens after that? Will successive US government waive these again? So if there's uncertainty, then that's bad for investment. And I think right now we see a lot of uncertainty.